Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. First up, let's take a look at the EU's economic performance in the third quarter of 2023. Despite challenges, the EU saw a stable GDP and a slight increase in employment, marking a positive turn compared to the previous quarter. And now, next, Japan surprised analysts with its fourth quarter GDP growth exceeding expectations. Despite weak private consumption and government spending, capital expenditure played a key role in driving this expansion. Moving on to renewable energy, the Netherlands made a significant stride in 2023, with nearly half of its electricity coming from renewable sources. This positive shift reflects a global commitment to sustainable energy production. Shifting our focus to Turkey, the latest labor force statistics reveal a 9.1% unemployment rate, signaling ongoing economic challenges in the region. Now let's explore the geopolitical landscape and its implications for businesses and investors. Rising tensions worldwide are reshaping economic dynamics, presenting both risks and opportunities. So global geopolitical volatility and its impact on global markets. So for our Turkey viewers, understanding tax deductions for rental income is crucial. You can take a look in our news here. February brought positive news for the global economy with accelerated growth in both manufacturing output and services activity. This uptick marks a promising trend for economic recovery. So let's discuss the FAO Food Price Index, which saw a dip in February. Lower cereal prices contributed to this decline, reflecting expectations of robust harvests. Shifting gears, let's delve into global bankruptcy trends. After a surge in 2023, there is a projected slowdown for this year, with stabilization expected in 2025. However, sectors like construction and real estate remain at risk, particularly in Belgium. Despite pandemic aid, Belgium saw a rise in bankruptcies in 2023 and 22, and on the flip side, accelerated growth is anticipated in 2024, especially in the United States, Spain, and the Netherlands. In other news, Turkey has made significant strides in soft power, climbing 10 spots in the 2024 Global Soft Power Index, ranking 18th in the media and communication category. Turkey's overall position rose to 25th, reflecting its growing global influence here. As Switzerland retains its title as the world's most talent-competitive country in 2023, thanks to its exceptional quality of life, robust education systems, and strategic policies. With its focus on sustainability and innovation, Switzerland continues to attract top talent in multinational corporations. In manufacturing news, February's PMI rating fell short of expectations, signaling seasonal hurdles impacting growth. Despite this, analysts remain optimistic, citing strong new orders and export figures. And France experienced a dip in manufacturing output in January, reflecting challenges in the sector. This downturn underscores the need for strategic measures to stimulate growth. In the US, consumer prices rose in February, matching economists' estimates. However, core inflation remains sticky, driven by rebounding energy prices. And now Canada's manufacturing sector saw a rise in January, with sales reaching 71.1 billion, and transportation and chemical sectors led to the growth, with Ontario posting the largest increase at 3.8%. Despite the uptick in sales, inventories declined slightly, while the capacity utilization rate rose to 77.1%. And Italy, industrial producer prices marked a decline in January with a significant drop of 10.7% from the previous year. Construction prices showed mixed trends, while services saw a modest annual increase of 2,003% in the fourth quarter of 2023. Industrial production in the euro area and the EU experienced declines in January, with decreases of 3.2% and 2.1% respectively. This downturn underscores ongoing challenges in the industrial sector. A recent OECD Development Center report highlights the potential benefits of transitioning to sustainable agriculture and renewable energy in Southeast Asia. This shift could not only boost employment and economic growth, but also bring environmental benefits. However, challenges remain in ensuring a fair and effective transition, emphasizing the need for social protection, local development planning, and skill development. Georgia saw a noteworthy influx of foreign direct investment (FDI) in 2023, while this marked a 24% decrease from the previous year, primarily due to reduced debt instruments. Equity capital witnessed a significant surge, and it's an impressive 68.3% increase. Despite a slight dip, reinvestment remains sustainable, and it showed a 7.2% decrease. Montenegro's preliminary external trade in goods for January stood at €260.8 million, signaling a 13.8% decline compared to the same month of the previous year, while exports decreased by 49.9%. Imports saw a modest increase of 1%, highlighting the challenges faced in the trade sector. And lastly, in January, Sweden experienced a 0.6% decline in private sector production compared to the December. This decline, both in seasonally adjusted and calendar adjusted figures, underscores ongoing challenges in the country's production sector. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching, and remember to subscribe to our channel for the latest updates.